right, we're going to get started. People come late, they come late. Got to get going. We have a lot to do tomorrow. Busy day today. Can't even believe tomorrow's only Wednesday. Feels like Wednesday today. Feels like Thursday. It was a very busy market week with all the news and tariffs Monday and Tuesday. And a very busy week to trade and watch the news too. So we're going to talk today about gaps. That's what I do. And we're going to talk about the power of trading gaps. And we're going to talk about the idea of trading gaps with momentum, which is what I do. Again, if you have questions, you can plop it in the room. I appear on TV. I was actually on a brand new channel on Monday. I was on Dr. Phil's channel, Merritt Street Media. So it was the first time. And we talked about tariffs, and that's been obviously the topic, the hot topic of the week for everyone. If you have questions as we're going along, you can email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP. You can follow me on Twitter, Facebook, YouTube, or Skype. And again, if you're interested in more information, you can always call me, email me if you have questions about the class. The class for February is a couple of weeks, but it'll be here before you know it. February 22nd and 23rd. We'll talk about that at the end today. So, here we are. It's February. It's crazy how fast this year is already going. And again, before you know it, it's going to be March. Then it's going to be April. Then it's going to be spring. And, you know, if you don't have a plan of action together for this year, how to be successful, it's not too late. But you shouldn't put it off. Now, I know it's Super Bowl weekend, everyone wants to party, but take an hour, Saturday morning, sit down and get a plan of action together for your year for 2025. I mean, this is if you're trading or if you're not trading and you want to trade. What do you need to do? What are the next steps? Okay. And if you were trading all of last year and you didn't have a successful year, it's important to get organized so that you can have a successful year. So again, we had a busy 2 days in the market. Why? Well, actually, let's go back to Friday here. Everyone see this is a chart of the Qs, okay? So we had a gap up. Here, rallied, fell. This was Friday. Then we had a gap down, then we fell, then we rallied, then we had a gap up today, and then we rallied. So this, just in a 3-day period, is volatility and momentum in the market. No matter how you look at it, you can make money trading volatility if you know how to trade it, okay? So actually, momentum and volatility are your friend. It's not something that you should be in fear about, okay? Now, I put this in here. I have to update this year's stats, but this was 2024. All the trades I called in the live trading room today. We did PayPal. I have that chart in here. It was a nice trade today. We did a put in PayPal. We did an option and a day trade. But these were the stats for the trading room for 2024. My average risk was around $3,500 per trade. These are trades on margin. You have to have a margin account to do the trades I call in the room. So it was 901, 138 for last year. And then here were the stats, a 69% win ratio. I always get these questions. You have to be aware of the fact that of every 10 trades, 3 are going to lose, 7 are going to win on average. And again, it's not like it goes in coordination. So you have to be active in trade. And we usually do one thing a day. Like today we only did PayPal. But if I do a trade and take a stop, I'll do a second trade. Okay. So that's why I use stops. And I do talk about that in the class. Now also I do options, which I told you we did the put in PayPal today. These are the stats for the entire year for last year. Again, I have to put 2025 in here. Can't even believe it's February already. I risk more money in my options. Some people are just doing options. That's up to you. But I like to do both. Now, I'm risking an average of $8,000 per trade in my options. I might bump that up. And my day trades too, because it was a good year last year. Same stats, about 70% win ratio. And again, over 3.8 million for last year. Now, somebody asked me a question. I don't see that person here. Or maybe he is here. Is the guy here that emailed me about it's $60,000? I don't remember that guy's name. I have to look up. Somebody emailed me on Friday that they had $60,000 to trade. If you have $60,000 to trade and you open up a margin account on 4-to-1 margin, then you would have $240,000, okay, in BP. Is the man that emailed me that here? I don't know. Maybe he is. I have to look up his name. Anyways, long story short, that is not enough to do some of the positions that we did in expensive stocks. For example, like Tesla. Okay. Tesla is over $400 a share. In that case, you could have done an option. Okay. Or you could have opened up a prop account. Now, prop account, you're going to get 10-to-1 margin. Okay. So you have to take the amount of money you have, look at the type of account that you have, and then make an assessment what type of trades you want to do. Again, I like doing both. Okay. Same strategy. They do the exact same strategy. So again, 70% win ratio for the options and 4.7, a little bit over 4.7 million for the year. Again, you can talk to me if you want to ask me about risk. You can talk to me about the type of account that you have. The best thing you could do is talk to your broker and ask them, you know, where you are, how much margin you have, do you have to fill out forms, get set up to do options, whatever you need, and then find out what works best for you, okay? So again, today we're going to talk about momentum, we're going to talk about gaps. I put this chart in here. This is a trade that we did feels like a couple of weeks ago, because again, we're already in February, but this was the beginning of 2025. We went long JPM. So you say, well, what's the momentum in this stock? It's getting bought. The momentum was to the upside, okay? So again, trading momentum is great if you get in the right pick. Now, again, this was the right pick because it had a big move for the stock. I just want to show you here where it was right around 240-ish, and it ran up 20 points, and it did it in a week, in a couple of days. So that's a big move, and these are the types of moves that I'm looking for every single solitary day. So we did this as an option. We got in at January 6th. It cost $2. We did the 250s. So I saw here that this stock would go to 250 to do that trade in the week that we called it. And it worked. Now, the trade was down before it went, but it went in the time of the option. That's another reason why you have to keep your risk within your parameters. And any questions as I'm going along here, let me know. Anyways, this was a good trade. It expired on the 17th. It had the move before the time. I could have even held this longer. Again, paid $2, got out at $6.75. If you had $1,000 risk, you could have made $2,375, and that is a good solid trade for someone with, I don't know if you want to call it a small account or anything $5,000. You could have taken this trade if you had an options account, or $7,000 if you had an options account. If you had $10,000 in an account and took this trade, you would have made almost 25% of your account in one trade. That is a good solid trade. And again, that is how you can make money with a small account when you find the right pick and get the momentum and go. Now, again, I was in a podcast today and someone's asking me problems people have. What is the biggest problems people have? One of the biggest problems people have is they don't size themselves right. And because they don't, they take a trade and kill it. Again, this trade was down before it went, but the call was right. It did it. It did what I wanted it to do. The momentum was there. Okay? So sizing is critical because you won't give the trade a chance to make the move. Now, ideally, when I call a trade, it happens within 24 to 48 hours of the time that I call it and do it when I'm doing an option. If I'm doing a day trade, it has to go the day that I do it. Otherwise, I'm not holding overnight just for show. But anyways, PayPal today, which we'll look at, did go today. So ideally, everything would go the day I call it, but that's not realistic. And again, the market right now is in a positioning where we're going to have lots of news events, lots of White House press conferences, lots of things happening this year, probably with the Fed too. Economic data that's out, and in a new administration, you're going to see all kinds of news. The tariffs is just one thing that you're going to see that's going to create volatility in the market. Anyways, I'm seeing some people come in late. If you have questions, write it in the room. So it's about becoming an expert. So number one, I focus on shorts. But I will tell you, it seems like I've been going long a lot in the last few months. But luckily now today, we're back on track with the shorts. But I do gaps no matter what I do. So I focus on gaps. I'm an expert in gaps. but I do prefer to short. In order to become successful in the market, you have to become a specialist in one specific strategy, a strategy that reads institutional money, or what I call power money in the market. How do you think PayPal went today and fell off a planet? Again, power money. This brings momentum and opportunity. Every trader in every level must learn the skill set, and it can be acquired through education. So this was another one. I'm just going back here. I was just talking about the fact that I seem like I'm going along a lot in the last few months, but we did Tesla, and we went long this here, and it had a very big move. This was in December, and we also did it in November. Now, my expectation is that Tesla will have another move up too at some point here. We did this Friday, and this ran up Friday. I was looking for 420, and it basically got there. But again, this here is an example of what? Of momentum, volatility, momentum. Again, you got to get the timing right. You got to get the timing right in your trade no matter what you do. Otherwise, you're in pain. Even if you take a swing trade, you say, I'm just going to buy it, I'm just going to hold it, I'm just going to do it, I'm going to do it on cash. It's very difficult for people to hold trades when they go against them, okay? And that's just, what I found having conversations and talking with people. Anyways, here was the one Tesla we did, expired on the 24th, we did the 425s. The 14th, let's take a look at the Tesla Tuesday. Tuesday. Here. So again, stock closed here, gapped up, dropped, rallied, boom, ran all the way up, boom, ran up through the strike. Everybody see it? So again, this is momentum. Tesla got bought. Again, this might be easier for you to see, but this is still the same thing. This was $7, which I thought was very reasonable. At the time that we did it, again, we did the 425s, it was here. It was nowhere near 425. So actually, this could have been a lot more expensive. So if you did two and you had $1,400 and you wanted to do two, you could have made $1,400. If you did 12, which I consider an advanced trader risk, you could have made $8,400. It was 100% return on investment if you flipped it around, okay? So when you take an options trade, you're not necessarily holding that trade to the very, very last day. You're getting the move, get out. Take it, get the move, get out. That's what momentum is. And you don't have momentum in every single stock and every single day of the market every day, even in the trend, okay? Does that make sense to people? Now, I was talking about this earlier. It's earnings season. PayPal was earnings. That was this morning. It's the best time to trade. We get lots of moves, lots of things to look at, lots of gaps. And again, it's fun to trade when you're getting the big moves. Again, PayPal was fun today. So how do you earn a living trading? How can you turn this into cash? How can you do it? You can even do it on the side. Some people love their careers, love what they're doing. They don't want to quit their job. They just like the idea of maybe trading options on the side or whatever they're doing, okay? But either way, whether you're doing this full-time, part-time, you need a winning strategy, and you have to learn it first. Otherwise, you're not going to know what to do. And you need a supportive mentor. I try to be that for people. Where? In the live trading room. Again, the live trading room every day, like I called the trade today in PayPal, I'm there for people. I'm saying 100% conviction, this is the best thing to do today, PayPal. And that should help people then say, oh, yes, I like the PayPal too. You do and follow, and you gain the knowledge and information in the class, and then you process it yourself, and you log in the room, and you say, yeah, oh, I like this one too. I get it. And that helps you repeat the learning in the room. And then number 3, become an expert in one thing, which is implement the strategy, trade, get good, and then add size to win big. And again, you can risk whatever size you want, you know? Any questions here as I'm going along? I see some familiar people, some familiar faces, some new people, old people. Ask me questions if you have any. Anyways, again, how do you make money in the market? Think about it. It's common sense. You have to get the direction right. I do not trade Forex. I trade gaps. So it wouldn't make any sense to trade Forex. It wouldn't be profitable. Why? There would only ever be one gap a week. There's only one close and open. So what is a gap? A gap is the difference between the close and the open. We're going to go over that shortly. It would make no sense to do it because there's only one gap a week in Forex. Also, you have less choices. You're trading currency pairs when you're trading Forex. I have thousands and thousands and thousands of stocks every day that I can choose to trade and look for. So you're very limited doing Forex. I get that people like Forex for the leverage, but you shouldn't choose to do a certain amount of trade or a certain type of trading just for the leverage. Same thing with futures. People do that because you can open up a small account and the leverage with futures too. Don't decide you want to trade a strategy just because they're giving you big leverage. Don't do that. That's the wrong idea. Now you could say, well, I'm going to go to this broker because they're giving me leverage after you made up your mind that you want to do XYZ strategy. But don't decide to do a set type of trading based on just the leverage that you're getting on your cash. And it's the wild, wild west out there in certain of these things. I mean, you can get hurt, and people do get hurt, actually. Okay, we have a big question here. I have to rewind. Stephen, you signed in late. I can go back. My win rate's 20%. I did go over that at the beginning, but you'll have to go back and watch the video. I am taping this. I will post it on YouTube. My win rate's 70%. So you missed that at the beginning. I had all of the information from 2024. Average days to hold. I'm usually doing weekly options. Maybe 2 weeks out, but that's a long time for me. I am going to talk about gaps, Linda. With your options that you email out, when do you do them? The night before or the morning of? Well, I don't know what you mean. If I send a trade out at 6 a.m., I can't do that until after the open. So I don't understand the question there, Brian. Okay, so let's get back to what we're doing. So again, how do you make money in the market? You have to get the direction right. So how do I do that? I determine who is in control. And how do I do that? I read the gap. Okay. So again, what is a gap? A gap is a difference between the close and the open. Again, we were talking about PayPal. So PayPal closed up here the night before, snug as a bug, right in here around 89 and change. Gap down, open this morning, right above 82, rallied, fell. Just literally fell into the close. Just kept falling. Okay? Anyways, again, this is a gap. So Linda's asking, what is a gap? This is a gap, Linda. This is a bearish gap. Now let's look at a bullish gap. There are bullish gaps and bearish gaps. Here's a bullish gap. PayPal closed here at one price, 83 and change, and opened at a different price up here, around 85 and change. So this is a bullish gap, okay? So there are bullish gaps and there are bearish gaps. Now, as I started out saying, I prefer to short, but I will go long. Again, JPM was a long, Tesla was a long. But my point is that if you get the right pick that's going to have momentum, again, this is a great example because we just did this today. It is a lot easier to make money than to just kind of wait for the market and have to actually accurately predict the market direction. There are times when I read the market accurately based on the gap of the market. Then there are times that the market has no read, or I don't read the market accurately. I think it's going to do one thing and it does another. I don't trade the market every day. So trading stocks gives me flexibility because the market can be tough, okay? Anyways, if you get the direction right, you're going to make money. If you get the direction wrong, you will lose. So I know this sounds simple, but that is really what it is. And again, the momentum has to go in your favor for you to make money in the trade. Sorry. Any questions? Stephen, I will email you the video then later when we're done. So anyways, let's talk about gaps some more. So what is a gap? A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. So you're always going to have a close and open of the U.S. stock market. So there's a gap every day. When Friday we close at 4 and weekends were closed, and then on Monday the market opens again. So again, Forex is not something that I'd ever consider doing because you only have one close and open. We're never doing anything that doesn't have volume, Jeff. So I just don't do anything that doesn't have volume. I won't do it. Now there are bullish gaps and bearish gaps. Here's one that was a bullish gap. This was Dow. Again, this happened just recently, January, about a month ago. Stock closed here gapped up. Again, rallied. This is a big move. This is a momentum move for the stock. The stock opened here around 65, ran up here to 69. That's a big move for the stock. That was a bullish move. So who's in control of Dow here? The bulls. Again, I'm an active trader. I'm a day trader. I'm in and out. In and out. Boom. Done. Again, we're not investing for our retirement account in these trades. If you want to do swing trades, that's fine. People that are doing swing trades are getting killed this year, though. Absolutely killed. And they're probably going to get killed all year. Swing trading is going to be crazy this year. Because if you're looking to even trend trade or predict the market direction, you're not going to be able to do it. Because there's too many unforeseen things that are happening right now. But personally, I like to do fast trades, and I've always done that. For as long as I've traded for 17 years, I've always done fast trades. I want to make my money right now. Again, your retirement account is something different, but people like to do swing trades. I don't know why. But again, they're not faring very well since the start of 2025. Target was another one we did here. This is a bearish gap. Stock closed up here around 155 and change. Gap down here to around 126. Open, fell, boom. This was a short. So you could have shorted this as a day trade, could have bought a put. Boom. And again, where did it go? Fell all the way down, broke 120. So this was a bearish gap in Target. Okay? That was back in November. So again, I have one strategy. It's called gaps. Again, I did a podcast today, and the person said, well, what do you do? I said, this is it. They said, do you do anything else? I said, no. Why? I don't need to do anything else. And one of the reasons I'm really good at what I do is because I've been doing it for a very long time, and I don't do anything else. There's a lot of trading educational places out there that do Forex and futures and Bitcoin and all kinds of things. And they're not really experts at anything. This is what I do. I've been doing it for 17 years and nothing else. And there's no reason to do anything else because you can make money doing this, and all you do to make more than is add the size. So again, what is a golden gap? A golden gap is a gap that rates 20 points or more per the Golden Gap 26-point rating system. This is a system that I developed myself. You take the trade in the direction of the gap. I'm never reversing it. And you can do the trade as a day trade or an option. That is up to you. Again, if you want to ask me questions about that, you can. Now, if I call a trade and it's a day trade and it's an option and I call the same thing, you know I really, really like it. Okay? So if I happen to call the same thing, I love it. Okay? Because I don't always call the same trade for the day trade and option. First of all, not everything we do as a day trade is actually makes sense to do as an option or isn't even available. And secondly, not every day trade do I think will keep going to be worth it to do the option at all, because obviously options are different. And when you do an option, you're looking for a certain return on investment within a certain period of time, and we're doing the Friday expirations. When I'm doing a day trade, I'm trying to get out very quickly in a few minutes, okay? Anyways, you need a focus. You need a focus to trade. This year, you're already seeing how every day you get up and somebody's different. Now, again, right now, I'm in calls and puts for my overnight trades for my options. So, you know, but if people have swing trades on and they're saying, oh, the market's higher, we rallied today, we rallied yesterday, don't be surprised if we're down tomorrow. Or we could rally another day and then be down the next day. This is a market where you absolutely have to know what you're doing. You have got to be on it, because whatever you think it's going to do, it's not. Trust me. You've already seen this for the last, 5 weeks. And it's not going to end, and it's not going to stop, and it's going to keep going, and there's going to be other things. And then even when the tariffs get resolved, which isn't going to be right now, something else will happen. Do you understand? There's lots of changes coming because a new administration is here, and there's lots of things. We're interconnected to multiple different countries, and there's multiple different wars going on. And interest rates is still at the forefront, and high inflation. This is going to be a year, and if you don't like watching the news, don't. But the bottom line is, you better know what's going on in your trades, and you better know what you're doing, or you're going to lose money. And so if you don't want to lose, then you got to get focused, okay? And you need a strategy, and you need a strategy that works under any market conditions, even if you don't have the market's help. You know what I'm saying? So you need a focus. And again, a lot of people just don't have a focus, or they're not focused on the right things. So how do I do it? I rate gaps for the 26-point checklist. This is what I teach in my class, which I teach once a month. So once a month, I teach my class on the weekends, on Saturdays and Sundays, when I'm not trading, because I trade Monday, Tuesday, Wednesday, Thursday, Friday, and I go through and I explain it, and then people join the room and they take the trades if they want to do it. But the rating system helps me determine who is in control. Because if I can figure that out, then I'm going to get the momentum. And again, I want the big momentum, preferably. So again, gaps happen in the market on a regular basis in the U.S. stock market, which is what I trade. However, some gaps are better than others, some gaps are nothing gaps, and some gaps are very powerful displays of institutional money. The most important gaps in the market are gaps that signify a change in direction or a bigger move in the same direction. Understanding which gaps are meaningful and which gaps are not meaningful in the market will help you to know what to do and when a change is occurring. That is how you know when the power money will flow to pay you, okay? So read the footprints of institutional money because it's going to help you decide where to go, and then that's the only way you're going to get a big move. The only way you're going to get a big move is if you have big position players in the stock or the market, because how else is it going to move? You're never going to get big moves by having tons and tons of retail traders. While it's 1 out in a million, bazillion, where you would get some of these meme stocks to go, it's not something that's consistent, it's not something that's predictable, and it's not something you could trade year every year. You have to go with the hedge fund money, with the big money, with the big professional traders. And they're buying stocks and shorting stocks and selling stocks all the time, okay? So it's about finding it, reading it, seeing what it looks like, and then taking whatever position you can afford, however you can afford it, as a day trader or an option. Again, big footprints of institutional money. Now, again, this was just a good example here of this Tesla because it just had such a big move in such a quick time. And again, this was expensive, but you could have bought an option in it. This or call, this was back here in December where the stock ran up over 100 points in a couple of days. Even for that, it's big. And again, it could do it again. Could do it today, could do it tomorrow, could do it March 1st, who knows? When you start to trade stocks and you see how they act, you know, you can really tell, and again, I've been doing this a long time, how certain things act. So I'm familiar with a lot of things that we trade. But anyways, institutional money is in charge of the market and stocks at all times. And that's why you have to look for it and you have to be on the side of it, okay? And again, how do I determine that in the gap? Now, any questions here so far? How are we doing? I think I caught up on all the questions. Here was another one, Netflix. Again, great example. The stock today closed here, gapped up, snug as a bug, okay, right around 970 something and change, and ran all the way up to 1,008. Almost got up to 1,010. That is a big move for this stock. Now, again, I know it's expensive, but we did calls in this last week, okay? And you could still be in it. So again, the benefit of doing options is you can hold overnight. You can wait for the big move to happen in the time you have the option. The other benefit of doing options is, guess what? You can trade a stock like Netflix that costs over $900 a share without having to have it in your account in margin. So it allows you to take these and trade these, which they're very fun to do. But again, once you understand what to do and you learn in the class, you have that information and the why. Why did this go? Why didn't this go? How did you know PayPal would fall? How did you know Netflix would get over 1,000? You know, these are the kind of things that help you risk your own money, because that's what you got to do to make money. You have to be able to put the trade on, risk your own money to make money, whether it's small, medium, or large. And if you don't understand what to do, it's going to be hard for you to hold the trade while it's down till it goes, or hard for you to hold it to get a bigger move in it, or even hard for you to do it after you take a trade and if you get a stop. And again, I said some of my trades stop. So if you take a stop, you're like, oh my God, I don't know if I can do the next one. Well, then you don't understand, because you have to understand it's about the odds. So again, for every 10 trades I take, 3 are going to lose, 7 should win. Whether we do it options or day trades. That's my average, 70%. But understanding will help you. And you keep going after it and do it. Because again, the only way to move forward is to capture the information in your head, wrap your head and your brain around it, and understand why. And as human beings, we're curious. We're very, very curious beings. You could say, well, I don't care why. I just want to do the trade and make money. But you're lying to yourself if you say that. Because if you understand why, you will trade better. You have 100% conviction and you will put the risk on and you will do it, and you won't be in fear and make decisions in fear by killing a trade and getting out too soon or doing all kinds of crazy things or reversing the direction. We're curious, humans. Everybody here, we really do want to know why. You know what I mean? There's no special software. I don't sell software. You can open up a trading account and trade wherever you want. You buy the call and sell it to exit it. You buy the put to get in it, and you sell it to exit it. And if you do a day trade, you have to have a margin account, and you have to be able to short and go wherever you want. And you got to have charts. But, you know, every broker should have charts. You have to have live data feed. But if you have an account set up somewhere and you're happy with that, then I'd stay where you're at. Anyways, how do I figure this out? I use a 26-point checklist. That's what you learn in the class. And again, knowledge is key. There's thousands of stocks that are gap every single night and every single morning, but they're not all good. So I use my brain and get up in the morning and I go through my process every day and I don't skip it. This helps me do the trade. Okay, this helps me make money. And this is, again, a very, very important piece of it that I think a lot of people, they go into trading and maybe they take one class and they learn something. I say, I'm going to learn how to do it. And then they do whatever that thing is and it doesn't work and they lose money. And then somewhere along the line, people are losing and taking classes and losing and not getting anywhere. And then they just stop thinking that they need to know what to do to trade. But if you go back to the very first day that you decided that you wanted to trade the stock market, I'm sure that you realized that you didn't know what you were doing and you had to learn. And I know because I teach people that don't know anything from the jump. And I remember myself. You've got to learn what to do. There's no shortcuts, okay? You got to learn it. And it's the only way you're going to get good. And in fact, the fact that many people will never take the time to learn it, never invest the money or the time or the energy or anything to learn it, it puts the odds on your side. Because if you're willing to do that, you're head and shoulders above most people. Because again, most people don't care, won't take the time to learn it. You know what I'm saying? Okay, so let's talk about gaps. Again, gaps are the most powerful show of price action in a chart. Gaps have large moves. Gaps can move up or down. Some of the biggest momentum moves in a daily chart come from a gap. When I trade, I'm looking for and trading momentum. Then whether you have a small size or large size, you will get a good risk to reward. Again, this is one of these things like I was talking about. You have to look at the amount of money that you have and be realistic with it. You can build your account up over time. That is something that you can do. You can take your time to do it. There's no reason to really rush it, okay? I think it's more important for people to learn and start out slow and do it slowly, okay? Any questions here so far? I'm seeing some people come in late. We're already talking, but any questions, let me know. Again, we didn't have a rate cut. We didn't have a rate hike. Could something happen this year? Could the Fed do something to move the market and create volatility? Of course it could. Absolutely. And again, this is one of these things where you have to pay attention to what's going on. But I don't make trading decisions based on the Fed. Again, you're guessing. Nobody knows. It's opinions. And they don't even know what they're going to do probably the next time around. So, you have to look at the price. You have to look at the chart. That's what I'm looking at. And that's why I'm looking at the gap. So it's technical analysis. You got to have live data. You got to have a daily chart. That's where I'm getting all the points on. And it's got to be good. Okay. You got to have a good internet connection. Now, I don't trade on Wi-Fi. I know some people are on Wi-Fi. I have a hard-wired cable. I find that that's better for me where I'm at. So anyways, you need to learn what to do, then do and follow, okay? And I try to be a supportive mentor for people in the class and the live daily room, which is really like a mini class every day because I'm talking when we're trading. And again, trading really is about consistency. Now, I told you we did PayPal today. I don't have the trade in here. I showed you the chart. I got out of it for the day trade in the morning way nowhere near what it was at the lows because I did the put. But I'll show you the trade we did Friday and Monday. So this was WBA, okay? This was Friday, just a couple days ago. Stock closed for gap down. Remember, this was Friday. This was even before all the tariff stuff happened. So again, this closed here, gapped down, fell, and we shorted it. It was a little rinky-dinker, but it worked and it was profitable. We entered this here. This was a day trade on margin at 982, got out at 955. Again, I'm trying to turn over my risk 1-to-1, or as close as I can get it. And that was the trade. So we actually shorted this. Even though it closed green, we actually shorted this in the tail and got out. We had an almost a low of the day entry here. This was a nice trade. Okay. Did not do any option in this. Didn't even look it up. Then on Monday, we did NVIDIA. Again, entered 114.05, 3,000 shares. This is a margin trade. Profit 1,500. I was having platform issues on Monday, or chart issues Monday. I had a good exit on this too. Stock closed here, gap down. Again, we shorted the tail. We got in, got out. And in the PayPal today, I was looking for $80 for my morning target. I didn't wait till it broke 80. It did break 80. But I got out a little bit before that. But it went all the way down. It broke 78. Went to 80, went to 79, went to 78, broke 78. It was a nice trade if you're in the put. So again, whether you want to do a day trade or an option, I like to do both. I would not overwhelm yourself by trying to do too many things at once while you're learning the program. I would do what you're comfortable with. If you already have a margin account, you're comfortable with day trades. Or if you already have an options account, you're comfortable with options. You know what I'm saying? But it's about following the system. Focus on the quality. Quality, quality, quality. I can't stress this enough. And even though there's, again, thousands of stocks that are gapping every single day, and the market gaps every single day, it doesn't mean it's good, or what I say, call predictable. So when I call something a golden gap, I say this is predictable. I can predict that this is going to go in the direction of the gap. If I get the rating and it's bad, it's low rating, I say, well, this isn't going to work. So again, then I don't do it. I'm not flipping it. I'm just not doing it. Or I say this is not predictable. Again, trading is about odds. Okay? You need to put the odds in your favor. So I say I'm using the system and going through the rating system. I'm not just trading on the fly, blind. If I put the odds in my favor and do the work, and I know this rate's 20 points or more, then I'm saying, wow, this is worth taking the trade. It's worth taking the risk, and I'm going to do it. Okay? And that is something, again, a lot of people just don't think like that where they're trading. They're almost gambling. I mean, they're basically gambling, or they're trend trading and saying, well, I like this, or the market's rallying, or the trend is up, let's go long. Any questions here? Brian's asking a lot of questions. Brian, do you have any other questions? Anyways, people enter my room and they expect to win, and that is the mindset as well. I expect myself to win. Again, you know, I'm very focused in the morning. I'm in control of the room. We're doing the trades fast. We're done. The options, whether you get out at for the first target or 50% or wait to each trade to get to 100%, is up to you. I find that people that have small accounts, though, tend to get out faster because they want to just get the little move and then take the next trade. That's okay. That's okay. Again, I like holding stuff a little bit longer because I'm trying to get a bigger move, but I'm never going to fault anybody for getting out when they're up in a trade because the market's very wild right now. So if you're up in something, you can get out. But, you know, having a positive mindset, a really good mindset to be successful really helps. And again, I have no idea what I'm going to do tomorrow, and I don't even care. I go to bed at night, and I get up in the morning, and I figure it out then. I chunk it out in the room. That's how you pull these numbers together, where you can pull and make several $100,000 a year trading. You pull the numbers together by looking at each individual day, Monday, Tuesday, Wednesday, Thursday, Friday. Again, we're short-term trading. We're not looking at 6 months from now. We say, where's the market going to be in July? I have no idea. That would be ridiculous to even try to figure out in this environment. You know what I'm saying? I mean, they pushed the tariffs off 30 days, but what if they put them on? What if it happens? Who knows? It's about working smarter, not harder for trading. And again, I don't like to sit at a computer all day long. I'm doing other things. Right now, it's winter in New York. It's cold. I'm watching the news. I'm doing things. I'm doing webinars. I'm on TV. I don't like staring at the screen and looking at my charts all day. Nobody should be doing that. It makes you nuts, okay? And you're going to make stuff up that you see that's not there. You need to be focused in the morning. I always say I can be perfect for the first hour of the day. I can be absolutely perfect in my choices, in my decisions, in my speed of execution, everything. That's where you want to focus on that time of the day. And again, it is about working smarter, not harder. So you need to learn the strategy, follow a mentor, and then focus on one thing, which again, someone was asking about Forex. I don't do that. I don't do that. Why? If you have one strategy that works, you don't need to do anything else. Again, get really, 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 really good at one thing. If you wanted to become a doctor and you went to school and you went to medical school and then you did the residency You have to have what would you specialize in? Where you have to have a specialty. Do you want someone operating on you in the operating room if they're not a specialist? You say, well, I do this and I do that and I do this. It's like, whoa, no. I want somebody that's the best of the best at this thing. Whatever it is, whatever you need the operation on. Or if you ever go to the dentist and you need to get dental work. You're like, oh, well, I'm good at this and I'm good at that and I'm good at this. It's like, no. I want someone that's really, really good at just this because that's what you're paying them for. And you have to think of yourself that way. The first number is the entry. Second one's a stop, Jeff. First number is the entry. Second one's a stop. Okay? Anyways, consistency, structure, very important, invaluable actually. And again, I do go long and short, but I do prefer to short, and that's what I teach in the class. So how do I know what stock to trade each day? I get up in the morning and I look at what's gapping and then I rate it. You can rate as many things as you want, but usually I make a small watch list and then narrow it down. So I'm looking for gaps using a checklist. They have to be qualified. The checklist tells you what to look for in the price of the stock. This is what I teach in the class, and I prefer to short because stocks move so much faster than they rally. That's just the name of the game. I also find that most day traders don't know how to short or just veer off shorting or shorting wrong. So this gives me an edge when I'm shorting. And in times like this, in the volatility in the market, you're going to need to know how to short. You're not going to be able to go long all year long and make money. You need to be able to do this and have something else to do in your arsenal so that you can make money. Because there's going to be times where you're not going to be able to go long anything in 2025. Nothing. Not the market, not anything at all. You need to be able to have something else that you can do under volatile market conditions that you can make money. Again, PayPal is a good example because if you were long PayPal today, you lost. You know? Now, I get that the market rallied today, but there's going to be plenty of days where it doesn't this year. And so you have to be, like, again, aware, self-aware. Pay attention to your surroundings. What's going on in the world right now? Set yourself up so that you can succeed for 2025. That's what I was talking about at the beginning. Get yourself in a mindset that you are there. I'm going to do this, and I know ahead of time that I'm going to need to learn how to short, or whatever the case is, okay? Setting up the computer for shorting has been your biggest challenge, and you got to call your broker. You have to call your broker, go through a tutorial. Sometimes they'll get on your computer and help you figure it out. You could do that tomorrow, tonight, and they should help you for free. Anyways, the system tells you how, what, and when. How do you make money in the market? Trade a strategy and system that is profitable. Golden gaps are highly profitable because they focus on large momentum to trade. PayPal is a good example of that. What stocks should you trade? Stocks that gap and rate 20 points or more per the Golden Gap 26-point rating system. This is what I teach in the class, and I teach all the entries. So day 1 is the points, day 2 is the entries and exits. Trade the gap in the direction of the gap. If it rates 20 or more. If it doesn't, don't do it. I'm not flipping it. And then when do I trade them? Early in the morning on the open when they set up and trigger. And again, you must have a structure in place to make any money at all consistently. It's about the consistency that many traders lack. So people said, well, I don't have any discipline. Well, I mean, are you even doing one strategy? Are you trying to do 10 different things? Or maybe you don't have a strategy at all. Your strategy can't be, I'm getting up tomorrow and seeing what Trump says about tariffs. That's not a strategy. It's not going to work. Okay. So again, I'm looking at advanced technical analysis. I'm looking at the daily chart. And everyone should have that with their broker. And again, if you don't know how to short, or you don't know how to buy a call and sell it, or buy a put and sell it, those are all things your broker should help you for free. So how do I know ahead of time which stock will go? I don't. I see the gap, and then I rate it. And then I predict where it's going to go. So if PayPal had fell faster actually out of the gate, it would have gone to 75 today. It's probably going there anyways before the end of the week. So again, I'm very good at assessing a situation, seeing what to do, and then the targets as well. How do I do it? The checklist. The checklist that tells me what to look for and what to trade every day. So if you come and want to learn from me, what are you going to learn? You're going to learn how to measure gaps by rating them with a daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day, hopefully the day that we do it, okay? Number 2, a big move in the day. And then early confirmation of the buy as a move between 9:30 and 10, and precise entries with follow through and a good risk to reward target potential, because that's what we want. And again, you can get out wherever you feel comfortable. I know some people that basically are scalping, they don't want to put stops in. I teach how to put stops in, but there are people in the room that are not using stops. So that's on them. Okay, like if it moves 1 bar, they're out. Like they probably didn't even hold. I know people didn't hold. Some people didn't hold the PayPal down where I did today, and I didn't even hold it all day. But I don't trade all day in the day trades. But I put a stop in. But if you get it and you're in the right thing and you get the entry, you should be able to do it. And then where you decide you want to get out, takes time and you doing it and then getting comfortable with the system. But I really think 2025 is going to be a good year to trade. I really think it is. It's been a wild start to the year, and it was a strange start to the year because remember we were closed for the holiday, was in the middle of the week for New Year's Day, and then we had the Carter funeral, and we were closed that day. I mean, it was just like, it seems like one thing after another, after another, after another. I feel like finally now with just smooth sailing on track. Yes, the volatility's here, but we're getting the setups, we're seeing the setups, we're getting the trades, and you just push forward and you do it. This is me. I did a live class last year. I don't know if I will this year or not. I'm going to decide that soon if I'm going to do one this year. I don't know. That's up in the air, but I'm a real person. I live in New York. This is real. You can do it. I have people that are trading with me for more than 10 years. They're still in the room, and they don't need to be. They just like to hear what I say every day, and I make it easier for them. So this is real. You can do it. You have to be focused. And again, if you're focused on the right information, then you should be able to make money, whether it's small, medium, or large, depending on the size of your account. So think about it as a professional, like you were starting a business, because you are. It's your own mini little business. It's your own mini little trading business that you're doing at home or at your office by yourself for the first half hour of the day. So again, I teach in the class a 26-point checklist. You can go through and rate the gap every morning on your own and then log into the room at 9 a.m. It's about empowering yourself to do it, though. Again, the understanding why will help you as a human being. This is very important for people. And again, just acknowledge that within yourself. Everybody wants to make money, but if you don't know what to do, it's going to be difficult for you. So I teach in a complete system, again, all the entries and setups and everything that targets on Sunday. The class is called the Golden Gap Course. It's a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. So the class for February is February 22nd and 23rd, 9 to 5. Cost of the class is $69.99. People are already signed up, so don't delay if you want to sign up. I still have spots available in 2 weekends from this weekend. So this weekend's Super Bowl weekend, and then Valentine's Day, and then it's a class weekend. And I'm doing a raccoon special. Can you believe that? I saw that raccoon. This was Sunday in Central Park. Look at him. He was looking at me. He saw me. I have a couple of videos actually on YouTube of the raccoon. But I'm doing a raccoon special. If you're just interested in options and you just want to start out slow, I have the 6 months half annual subscriptions, normally $49.99 for 6 months of the options newsletter. I'm doing a raccoon sale. This is only through Friday for $39.99, and the Gap Options course free, which you can do then on February 27th, 11 to 3. This ends on Friday. If you want an introductory thing, you want to start trading, 6 months is a while. You'll get some of the trades down for earnings season. Get in, do the options class in February, and then you can do the Golden Gap later in the year if you want to. Any questions at all from anyone? How's everyone doing? Jeff, you got to call your broker. Brian, do you have any questions? I see some new faces here. Tanya, how are you doing? I didn't see you in the room today. Joseph, I see you. I don't know if you're ever going to do the class. Stephen, I will email you the video. Michael, I don't know if you have any questions. Yes, wear your broker out with questions. That's fine. That's what they're there for. That's what they're there for. I said the same thing to Tanya. Oh, Tanya, if you can hear me, you gotta... Oh, you were on a ski trip. Okay. Well, you missed a good one today, Tanya. Thanks, Melissa. I make you feel like you can do it. You can. You can do it. You can do it. I'm a real person. Like I said, people came to New York, met me, and did the class last year. I'm a real person. I've been doing this a long time. I've had the business a long time now, too. People come and people go. I'm still here, and I'm doing the exact same thing that I've always been doing. In fact, Sir Vinius, still not sure if I know how to pronounce your name. Are you there? I see you. He said to me on the phone the other day that one of the reasons he decided to join was because I'm doing the same thing, and my videos are on YouTube for like over 10 years, and I'm doing the same thing. I'm like, yeah, I am doing the same thing. I have to go back and listen to my voice, though, from 10, 14 years ago. Hear what I sound like. That would be funny. I probably sound exactly the same. I sound exactly the same, but the world is different. The world is different. And obviously I'm risking a lot more money now. So, you know, like I said, here we are, it's February. You know, don't put it off. You know, a lot of people I know, they want to join. They say, well, I'll join when I'm retired. I'll join next year. I'll join this then. Time goes too quickly. Invest the time and energy to do it. You got to take the weekend to do the class. You got to move your schedule, take the weekend, give yourself the time, invest in yourself. And again, this is a nice special here. If you just want to start to do the options and you can get in, you will get earning season trades because it's still earning season. So you're going to get some nice trades in here, and then you can do the class later. Wonderful. If you have questions, you can email me at melissa@thestockswoosh.com. Have a great night, everyone. Wonderful evening. Some of you I will see in the room bright and early tomorrow, and we'll see what we get. Another exciting day to trade. You're welcome.